All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Guys, we are dumping and we are dumping hard, losing some very, very key support levels, both Pitchfork and Fibonacci Fib channel levels. And this looks bad. I have to say, this looks really bad for Bitcoin, and we might see some relief coming in soon. But I am expecting a larger downtrend to continue here because of the price action that we're seeing. So, first off, I want to talk about in yesterday's video. Before we go into the price action, I just want to say hi to everyone in the chat. Welcome in, everybody. Olafray, welcome in. Glasshopper77, good afternoon to you as well. Do I chart USDT dominance? I will look at USDT dominance today. R Pink, it looks like you are DJ Threep now. Welcome in, man. Thank you for being here. Thank you for modding. Quiles 1100, welcome in. And Call Me Poppy, Andrew, I think that's you. Thank you for being here and thank you for modding. San Francisco Rider, Batiquito, thank you guys for being here as well. Mind Tapestry, thank you for being here. And awesome, man. You got the She Legit. You have to let me know how that works for you. Now, remember, the key to that is taking it consistently. With any sort of supplement like that, taking it consistently daily, after about a couple weeks, you should really start to notice a big difference with that. So keep me updated on that. I'd be interested to see how it works for you. But Andy, big man, welcome in. Thank you. Maybe you just changed it. Maybe that's you again, Andrew. Anyways, guys, we are dumping and we are losing some key support levels. Yesterday during my video, we were right in this area, right where my cursor's at right now, right where the anchored VWAP in the bottom of the channel is. If you look at yesterday's daily candle close, we closed right on top of the anchored VWAP, like exactly on top of the anchored VWAP, right where our channel was. But because we did we crashed down yesterday and made a new low, but we're able to reclaim that before the daily close, there was still hope that we could have maybe started to form a rebound here and get a little bit of a move up. But with today's price action breaking down violently like this with volume, if we turn on that volume with some pretty nice spikes in volume, if we zoom in onto the 4-hour time frame, really nice spikes in volume to the upside on this push to the on this break of our Fibonacci channel, it is not looking good here for Bitcoin, guys. I have to say this, it does not look good, and we could see Bitcoin continue a little bit further down before seeing some bounces to get some more downside. So what happened yesterday, if we go ahead and look on our 4-hour chart, we can turn on a couple levels. We can turn on a couple things here. So we will turn on our macro range. That is this entire price action of 2025. Actually goes a little bit into December. Let's zoom out to the daily chart so I can show you that again. This upper range here. And with this upper range in here that we're looking at, we lost the value area low yesterday, and we closed our first daily candle below that value area low. But we were hoping to get above it today. We were hoping to start to see a little bit of a relief rally, get back inside our volume profile, bounce from our very, very key support level down here, and maybe see at least a test of that point of control. Now, today, you can see what happened also. Yesterday, you can see there was a fresh daily candle close, that daily level at 92,900. If I go ahead and throw on our daily levels, $92,900-ish. We came up this morning. If we now zoom into the 2-hour chart, you can see after making the low yesterday, we came up, we back tested that daily level, and we rejected from that daily level. Once we rejected from that daily level, it was also near our value area low of our range. So we were trying to get back inside of our range. We rejected from the daily, and you can see here just wicks above really our value area low, rejecting from the daily, and now we're starting the aggressive dump to the downside. So whenever you lose a range, you'll often see an immediate low time frame backtest, and if you reject, you expect new lows to come in on the charts. Now we are seeing another immediate low time frame backtest again right now, and we're rejecting, and we could have expected new lows to come in on the charts below yesterday's lows because we did see another immediate rejection of that daily and of that value area low. But the big concern here is that we are breaking to the downside with volume, breaking this value area low. And more importantly, we're breaking our big Fibonacci channel, which has been our support really it's been the trend for the entire bull market. You can see at the very start of the bull market, we pulled this channel based off these three pivots, and every major level has been respected. Every major swing level has been respected on one of these Fibonacci channels for the most part. And we are losing our bull market support band, our bull market channel support, really, trend line. Also, if we go ahead and go onto our pitchfork that has guided us for the entire year of 2025, where we did reject at the initial all-time highs in January at the top of the pitchfork, we bounced from the 74K lows at the bottom band of the pitchfork. Then we did reject again at the all-time highs near the top upper pitchfork band. We are losing after rejecting on a bearish backtest from the channel the pitchfork midline. We are losing our pitchfork. And if we close today losing this pitchfork, we could be in some serious trouble here. It could continue some more downside for Bitcoin. Let's go back to the Coinbase chart real quick. On the Coinbase chart, if I zoom into that daily time frame, I do have to say now, there is a way we can be looking at an impulse to the downside. It's now looking more and more probable that we're in a daily impulse to the downside, a higher time frame impulse to the downside, where from our all-time highs to those 103K lows or 104K lows is a wave one. We retraced up to the golden pocket area in a wave two, or right underneath the golden pocket area in a wave two. We could be in a big third wave right now to hit into the either the 1.618 or that 786 that's just above that in a wave three, only to see a small rise in a wave four to backtest this Fibonacci channel that is breaking down today, and then maybe see a fifth wave coming down. And this fifth wave could be an aggressive fifth wave that comes down to take out our 74K lows. Now, what I've been talking about on the charts for quite some time, if you guys go back, man, it was when we were making our all-time high, our initial all-time high, when was that? In July. If you go look in July streams, I was talking about a possible flat correction that we could see on the charts. And of course, back in July, we were looking at that as the high of the B wave because it is right around your 1.236 Fibonacci. But you're in after a 5-wave impulse to the upside completes. So let me zoom out to the weekly time frame here. After a 5-wave impulse to the upside completes, you're looking for some sort of corrective move. Now, that corrective move in a super bullish trend can just be a flat correction. And then you could continue your bullish price action here. Maybe as the super cycle theory in some ways. And I said we could see a drop, guys, once we did come up to our targets between the 1.236 and the 1.382, and we rejected that area. We were looking at possibly coming all the way back down now to take out your A wave lows, which is your 74K lows. And I didn't think it was going to come down this hard, this drastically, and this quickly. But in the C wave, you are looking for a 5-wave impulse to the downside. And so it does look like now, if we do zoom back in onto that daily time frame, we could be in that 5-wave impulse to the downside with our sub count within the C wave being a wave one. And on Bybit, of course, our wave one ended with the crash lows, but I follow the Coinbase chart. So, it was 103.2 or something like that. Your wave two retrace up to backtest that pitchfork midline. Your wave three could come down to about 84.4. That's where your 1.236 is. Your wave four could backtest that anchored VWAP and now as resistance. And your wave five could be coming down to take out those lows. And that would complete your 5-wave impulse to the downside, maintaining bearish market structure, making lower lows, lower highs, lower lows, lower highs, and lower lows, all the way until we come down to take out our lows at 74K, and even potentially expanding this to about 70K, where we do have our macro logarithmic golden pocket. So this is something that I am watching as a probable scenario now that we are breaking our Fibonacci channel to the downside. Now that we are breaking that Fibonacci channel to the downside, if we close our daily candle below our Fibonacci channel, I do think we will see continued follow through to the downside. Now, yes, we're going to get some sort of relief from this bigger third wave here. We're going to get some sort of relief here in a 4, 5. I do have to say this, though. There is a way to count this as a 5-wave impulse. A 1, a 2, you have your big 3 here, a 4, a 5. You have your 5-wave impulse here. You have your 3-wave corrective move and a B here. Now, within your third wave, This is where things get really tricky. Within your third wave, we have your wave 1, your wave 2. Now, this is not a wave 3 because your high right here overlaps with your lows from your wave 1, and you cannot have overlap. So it actually has to be an even more bearish impulse to the downside, which is a double 1-2 impulse to the downside. So we have our wave 1, our wave 2, our secondary wave 1, our secondary wave 2, and now we're in a third wave here. Our third wave could end, and then we're looking for 2 4 5s, 4 5 4 5, and that is where our 4 5s could bring us down. Our first 4 5 could bring us down to take out 74K. We could get a swing failure pattern to 74K, and then we could see one more 4 5 to come down to 70K, where that macro logarithmic golden pocket is. If we look at our golden pockets, let's see, is that the one? That's not it. From our 49K lows to our all-time high, and we turn on that golden pocket, we make it based off log scale because that is more than a 100% move to the upside. You can see that 70K to 68K is going to be our macro logarithmic golden pocket. Now, if we look at our range that formed in 2024 for about 8 months long, and we look at where the value area high of your prior range is, it is coming in right inside of that golden pocket. And usually when you see a breakout of a large range like this, an 8-month long range, you will usually come back to back test that range before continuing to the upside. Well, we saw a front run of the back test on those 74K lows. We did not come to back test that range. And because we didn't, now we might be seeing a bigger flat correction where we now come down to back test that range before making another bigger push to the upside. It's just looking a little bit bearish here, guys, that we could continue this drop in bearish market structure, making lower lows and lower highs until we get down to 70K or at least 74K. So let me check the chat. Welcome in, everybody. I appreciate you all for being here. Archie TV, it's so good to see you, man. Thank you for being here. My mic is a bit low. Okay, let me know, guys. Some people come in here and say my mic is low, and some people say it's not. But when I'm looking at my volume dial, it's actually peeking out sometimes into the red because I have it turned up so much. And let me see if I can just get a little bit closer to this mic and see if that helps. Bot Keto, you got She Legit for the whole family. That is so awesome, man. I think it will work for you. At least in my opinion, it's a really great supplement. So let me know for you as well how that goes for you. And guys, health is one of the most important things in the world. So good job for looking into it, for taking some money and some investment in your health. That hope was slapped down both times. Yeah, man, we had some hope. We had some hope for a relief rally here. We really did. And it really was slapped down. Every time, guys, we still are seeing every little bounce that we see, we are seeing fresh shorts come in. So here on Monday, we had a low on Monday and we made a rise on Tuesday. If we go back and look at our open interest charts, our CVD and open interest, you can see that on that low, actually not so much Monday, but it was yesterday's low, you can see that push up that we got up into the daily. Look at this. This is your open interest is increasing. So those are new positions coming into the market, and a majority of those positions are short positions because we're moving down. Now today, this is what's really, really discouraging today, guys. This move to the downside is a healthy and strong move to the downside. Look at this giant decrease in your CVD. So that means a lot of aggressive market shorters are shorting the market right now. We know those are new short positions because your open interest is rising, and it's rapidly rising. So this push down from the daily level, from the rejection of our anchored VWAP, the back test of our anchored VWAP and the back test of our value area low, that rejection that we're seeing today is fresh shorts coming in. Bears are in control, and they are successfully pushing the price down in a healthy move to the downside with an increase in volume as the move is going down here. So everything I see on the charts just tells me bearishness. And we are also seeing some bull divs get invalidated. You know, 1 hour bull divs. You can see here with some of the 1 hour bull divs were invalidated on yesterday's low. Now we do have potential for some 1 hour bull divs coming in on Market Cipher B. NAMI has invalidated those bull divs already. But yeah, everything just looks bad here, guys. Yeshwanth, welcome in, man. Love back to you as well. Tamale, welcome in. Let's see here. Everyone was talking about 60, 70K bear market lows this time, and now we're hitting it in a matter of a couple of weeks. Yes, Tamale, the thing is, and a lot of people are saying, I'm not going to call a bear market until we break weekly market structure. And really, we've already broken weekly market structure by taking out your 107K lows, even your 98K lows, but your 107K lows was a weekly break in market structure. And that is your first sign that a macro reversal could be coming in. But now that we've even broken our 98K weekly lows, I know some people that are waiting. They're not going to call a bear market until we break either the 74K lows or even the 49K lows. By then, you're already down. Like, let's see, just taking out your 74K lows, you're going to be down now 41% on the thing. Before you're going to call a bear market, you're going to be down 41% before you're even going to start to call a bear market. So for me, I don't want to wait that long to find confirmation for calling for a bear market. I look at the trends, and we're losing today a very, very key trend of breaking this bull market channel that has held us the entire bull market, and we're breaking it to the downside. You can see that the daily candle closed right at that support, and we're breaking it down with volume. And yes, we are going to get some relief soon, guys. This thing can't keep going straight down forever. But we are seeing continued strength from the bears. Every single short, every single dump is new positions that are opening that are successfully pushing the price down. The bears are definitely in control here. And if we look at actually our larger CVD and open interest, let's zoom out to the hourly chart on this. You can see that we have been dumping for quite a while here. And in the dump to the downside, if we just zoom out on these open interest and CVDs, you can see since our November 14th lows, we are continuing to grind lower and lower and lower. Our CVD is drastically decreasing, meaning short positions are coming in, and a majority of those short positions are new short positions because your open interest is increasing here. So we are seeing the bears definitely in control, shorting every little rise to the upside and successfully pushing the price lower and lower and lower. And this is considered a more healthy move to the downside rather than a long squeeze where you have a big drop in open interest, prolonged drop in open interest, where that long squeeze, as soon as it's done, if it doesn't get new short stepping in, then it could just push right back up. We're seeing a healthy and strong move to the downside. Also invalidating a lot of the bullish divergences we were seeing on the chart. NAMI yesterday was looking like it could roll over here on this momentum wave and confirm a very local bull div. But now NAMI is even invalidating those bull divs to the downside on the daily time frame. Also, we were looking at potentially having that bullish money flow divergence on NAMI. If we pull up NAMI here, we were looking at the bull divs on the money flow really making higher lows. And here, when we bottomed out earlier this week, we were saying nice money flow bull divs here, but now we've actually invalidated those by making our money flow go lower and lower. So we're invalidating some key confirmations to look for a bigger push to the upside, a bigger relief rally. I'm not saying a reversal to make new all-time highs. I'm saying a relief rally where we could have bounced here and we could have at least seen a three-wave corrective move to come up to take out 103 or even 107. To take out some key lower highs on the charts and grab some liquidity. But we did not see that. We are successfully breaking down today. And depending on how bearish this candle closes, by the end of the day, we could be confirming, some pretty big continuation to the downside. So, False Prophet, welcome in, man. It's so good to see you here. Guys, False Prophet is the creator of NAMI. For me, this is such a great tool to help me with confirmations on when to enter and exit trades. It is such a good tool to kind of look at the money flow in the market and get a bias. So if you're interested, I have partnered with False Prophet to partner with NAMI Trading. That's his indicator here. And he was kind enough to give our community a 50% off discount. So if you are interested in purchasing NAMI, the link for the website is in the description to purchase NAMI, and the discount code Divine50 is in the description as well. Also, False Prophet, I wanted to get with you. I'll DM you after this live stream if you have any Black Friday sales running. So let me know about that. I'll DM you in a bit here. Chad P, welcome in, man. Good to see you. I should have just stayed short from 118. Yeah, you guys, I was short from 107, but my final take profit was 92.5, and now I'm regretting closing that. Okay, your mic is good. Okay, thank you, Eddie. And Eddie, welcome in. Let's see. John Shanks 5247 Turbo getting bull divs on the daily. Yeah, we can look at some of the altcoins in just a bit here, guys. The thing is, we want to concentrate on Bitcoin because if Bitcoin is going to continue dropping, then the altcoins will continue dropping as well. So yeah, let's focus on Bitcoin first, but we will get a chance to go into some of the altcoins today. You guys can post the altcoins in the chat. I will look at altcoins. We're going to look at the total market cap as well. But let's concentrate on Bitcoin for now. So Peter, welcome in, man. Peter Thor, welcome in. It's good to see you in here. Okay, guys. Yeah, pretty much this is what I wanted to talk about is this bull market Fibonacci channel. I mean, really look how highly respected this has been for the entire bull market. You know, we have had major respect on this channel, major respect, rejected your 2024 all-time high from the 1.618 Fibonacci extinction. And now we're breaking the base support of that channel to the downside with increased volume. By the way, money flow crossing over into the red on the 3-day time frame, just crossing over into the red and heavily in the red on NAMI. So even if we see a little bit of a relief rally, we could expect that this money flow is going to usually do what it does when it crosses over, and you're going to see some prolonged bleeding on the money flow for a bit. And potentially that dump to take out those 74K lows. Let's go into really quickly here. I want to go into our pitchfork. This pitchfork has guided us through the entire 2025 year. You know, rejecting from at the all-time highs from the top of the pitchfork. You know, we lost the pitchfork midline, back tested it. Once we back tested it, we expected to drop to the lower band. We got that drop to the lower band. That was our 74K lows. We bounced absolutely perfectly from those lows at the 74K. Sorry, guys, let me get this. Bounced exactly from the lows of the band. We came up to the upper band, rejected the upper band, came down to the midline, back tested it, rejected the upper part of the band, rejected the band again, and now we're losing our pitchfork as well. And if we close a daily candle below this pitchfork, which I have talked about this in the past on my videos and live streams, but if we go to the Coinbase chart, this right now is the Bybit USDT chart. This is pulled from our wave 3 impulse of that, from the weekly wave 3 lows up to the highs, up to the fourth wave corrective lows. Now we take that same exact pitchfork on Coinbase. Let's go ahead and hide the channel real quick. And we're going to go into that wave 3 pitchfork. That's not it. This guy right here. And you look, because Coinbase's low down here was a lot less of a wick than Bybit. Bybit got a huge wick down here. And so the lows are different. But if we look at the Coinbase pitchfork, we only tapped it once during the all-time high, not 3 times like Bybit did. We wicked past the bottom of the band just a little bit on the dump. But we did reject perfectly from that upper band. We did bounce from the midline. And you can see here, yesterday, we closed our daily candle right at pitchfork support. You can see right there, right at the exact pitchfork support. But today we're losing it. We opened our candle right at that support, and we're losing it with volume to the downside, which to me is concerning and does tell us that, man, we have more downside, more likely. Also, guys, we talked about this being a 5-wave impulse, a wave 1, a wave 2, a wave 3, 4, 5, right? We're looking for a 5-wave impulse to the downside. But within your wave 3, the thing is, within this wave 3, remember, we have to look at this as a double 1, 2. So a wave 1, a wave 2, wave 1, wave 2. We're still in our big third wave. Within the third wave, then we're going to be expecting 4 5s, 4 5s. That will end your bigger third wave, and then we're going to see a bigger fourth wave, fifth wave, and that's where we could come all the way back down to 70K. Now, this will take some time to play out. This is on a daily time frame, so this could take another month or 2 months to play out totally. But it does look like this downtrend could continue. Also, if we zoom out onto the weekly time frame, we did, and I warned about this extensively, as this upper range was forming in here. I told you guys it looks more likely to be distribution based off of the money flow leaving the asset as the range was forming and confirmed bearish divergences on the chart. But if we look at NAMI just in this upper range here, triple drive of bear div on the weekly, money flow draining out of the asset as the range forms, and we have money flow bear divs from your 2024 all-time high to your January all-time high to the new all-time high, bearish divergences on the chart across the board on money flow. Also, with momentum waves, you can see this overall larger bearish div that is forming on NAMI here. Look at market cipher B from your 2024 all-time high. We have a triple drive of bearish divergences with money flow draining out of the asset overall as the new all-time highs are forming. So it's that bearish pattern that is now starting to see some volatility kick into the downside. And on these divergences that we're seeing here, the one thing that I talked about is market cipher B is slower than NAMI once the market cipher B money flow starts to curve down. And that was about 4 weeks ago, 5 weeks ago. Once it started to curve down, I said, guys, this is finally starting to curve down. We could start to see a bigger drop now because it's starting to curve down, and that could be our distribution from this upper range. So if we zoom back in onto the daily time frame, as this upper range was forming right up in here, this upper range right here was forming, we were making new all-time highs, new all-time high, new all-time high, bearish divergences on the chart, NAMI was that last all-time high was not a bearish divergence, but overall, NAMI had bearish divergences on the money flow as this range was forming. You can see the higher money flow, lower, lower, and then the breakdown. And we even got a lower money flow on the lower high here on the 116K rejection. But you can see as this range was forming, money flow was draining out of the asset as the range was forming, making it more likely to be distribution to the downside. And I showed you guys this in at least 5 of my live streams over the last couple of weeks. But the last time we saw that was in our January all-time high range, where as we were making higher highs on the price action here, creating confirmed bear divs, and money flow was draining out of the asset as the range was forming. You go back and watch that video I made 8 months ago. I said it was more likely to be distribution to the downside. And sure enough, we lost the range and we distributed down lower. And that is exactly what looks like to be happening, a repeat of that. And I warned of this a couple weeks ago. I warned of this exact thing happening with this range, and also on Ethereum as well. We warned of that. So it looks like it is happening. Man, it's just a bummer to see Bitcoin breaking down. I am looking for a potential bounce soon. Let's throw on our, let's see, we have a 786 Fibonacci coming in here. Did we tap that? I missed it. If we did, not quite yet. So we have our 786 is about 85,500. And what I'm looking for, maybe a potential, at least a micro support, is between this 85.5 and 84.4. So I know that's kind of a big range, $1,000 range for Bitcoin, but we might be able to see at least a little bit of a bounce from here. Because, and specifically, I'd like to come down to 84.4 because that's your 1.618 of the Fibonacci. Now, because this is a double 1-2 impulse here, a wave 1, wave 2, wave 1, wave 2, wave 3, we're looking for more 4.5s within your third wave. So we might break past the 1.618 and come all the way down to like the 2 fib. And if we look at where that 2 fib would be, we can just throw that on the charts. That's coming down to 78K. We do have some support before then, though. Let me just get that off the chart. And if we look at our support levels, we do have a monthly level coming in around 82,500. And I do like that level as well. That monthly level is going to be a strong monthly level. And I believe we have a naked weekly point of control. Yeah, see that naked weekly point of control is coming in right where that 1.618 Fibonacci is. So I'm really liking that. Let me clean this up a bit for you guys. I really do like this area right here where it's about 84.5, let's say 84.6 to 84.4. 84.6 to 84.4 looks like a nice little level. We have a naked weekly point of control in there and your 1.618 Fibonacci extinction. So we might continue flushing aggressively until we hit this level. Then we might be able to see a small relief rally overall, ending up in another lower high before coming down and making another lower low. If we look at our monthly NPOCs, I believe our next monthly NPOC, yeah, we also have a naked monthly point of control down there as well. Let's turn on our naked month. Yeah, naked monthly down there as well. So nice level of support coming in right around 85K. Naked monthly point of control 84.9, naked weekly 84.6, and then our 1.618 84. So this for me is the next level that I'll be interested in looking for along here. Now, yes, you do have your 786 just a little bit above that, but I would say these volume levels are a lot stronger than just your 786. So we could wick past the 786 at 85.5 to hit into these guys and then close your like 4-hour candle at or above that 786. And then you might be able to see a little bit of relief come in here. But once again, if we see that, I'm looking for a wave 1, a wave 2, a wave 3. I'm just going to be looking for a wave 4 before seeing another wave 5. And that wave 4 could potentially bring us to backtest our channel breakdown or our pitchfork breakdown. Now, in this case, I'm going to be looking at the pitchfork breakdown, which is going to be around 91K, 91.5K, 91K. Yes, guys, please hit the like button. If you get any sort of insight into the market from this stream, please hit the like button for me. Please subscribe to the channel. Also, just want to take 1 second here to shout out the partners of the channel. BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much you trade in those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit just $100, you can get a 50% deposit bonus. And then they're offering various 20% and 10% deposit bonuses if you deposit some of the larger amounts. I have partnered with BYDFI to create a Telegram community where I do post my analysis, my trade setups. You guys can ask me questions on coins, questions on technical analysis. That Telegram community is free. The only requirement to get into that private Telegram community is to sign up with BYDFI using my affiliate link and deposit at least $100 into the exchange. Once you've done that, you can click the Telegram link in the description of this video. Once you're in that Telegram chat, type in /verify in your user ID, which will be right up here. It's going to be a string of letters and numbers probably for you, and that'll get you into that Telegram community. Also, BYDFI is doing a trading competition for me right now. It's running for 15 more days. So if you want to sign up for that trading competition, it's in celebration of me hitting 3,000 subscribers on my YouTube channel. We do have a $2,300 prize pool right now, and this could increase for every $1 million traded. They're adding $100 to the prize pool. You can see we have about 15 days left. You're going to get the top 5 traders will get 80% of the prize pool, and the remaining 20% will be randomly distributed amongst 5 other people that just participate in the trading competition. Also, they're going to be giving away a pair of Samsung earbuds to someone randomly within that trading competition. So if you're interested, I can put the link in the chat for this trading competition. And sorry, guys, I was trying to look up as I was saying it, so I got a brain fart there. I'll put the link in the description for the trading competition. So if you want to sign up, it's just a good way to maybe possibly earn some extra money on top of your trading that you already do. Okay, let's get back to the charts here. Let me check the chat here real quick, see what you guys are saying. Mukchina77, welcome, man. Greetings to you as well. And Jafiel, welcome in, man. Thank you so much for being here. You longed super at 22.9 and got stopped in profit. Super looking weak. Not sure where the next support is. BTC just keeps pulling her back down. Yeah, Jafiel, we'll look at super. You know, if that order block didn't hold that we were looking at yesterday, gosh, that's going to, we do have a support level below that, but we didn't want to lose that order block there. And it does look like we're losing that order block. So our next big level is going to be that macro 786 and that 1-to-1 Fibonacci extension between like 15.6 and 14.8, let's say 14.78. So this general area in here is where I'd be looking for the next support level. And gosh, if you have your value area high also of your accumulation range, that's going to be coming in at 17.5. So that value area high of this accumulation range, you could see a small bounce off that. But I would be looking, you know, if we're looking at a larger, what our 1-to-1, we're looking at a larger 3-wave corrective move to bounce from that 1-to-1. because you have your impulse up here, and then you get your 3-wave corrective move, and then you could continue here. So overall making a higher low. So you really do want to hold this general area, and you can see your range point of control is in there as well. Your accumulation range point of control. If we just throw that on the chart, that accumulation range point of control is within that box. So yeah, very, very key next level of support is this guy, but we're losing that daily order block. That daily order block in here at your golden pocket, your logarithmic golden pocket, not a good thing to lose. Let's get rid of those. But that's long story short, I would say that's the next level. You're probably going to see some sort of reaction from 17.5 where the value area high is. But overall, your downtrend's probably going to continue until you get down to like 15, 14. Okay. Yeah, please hit the like button, guys. If you get any sort of insight, let's check Bitcoin real quick. Is Bitcoin slowing down? 15-minute chart. Now, on the dump today, we're starting to slow down a little bit. So you can see here, it's that kind of, you get your kind of grindy channel up in here. Then you get your big dump. And then after your big dump ends, you generally start to get another channel. And generally, once that you get, Kuhns calls this the trend and turn methodology, but it has to do with like multiple 1-2 impulses to the downside. So on a very low time frame, you could be looking at like an intraday impulse down, and we could either expect it to end, but generally these will end at a support level. They're not going to end randomly. So what I'd be looking is for that 85.5, which is where your 786 is, or really I'd be looking at that 85K level where you have a naked monthly point of control, a naked weekly point of control, and your 1.618 Fibonacci extinction for the higher impulse to the downside, the wave 3 target. For now, it does look like we are kind of attempting to form some sort of descending channel here. Just very, very locally. Yeah, rejecting the midline right now. Turn off our monthlies. We are starting to develop some bull divs on the 15-minute, or 5-minute, excuse me. You can see lower lows here, higher lows here, money flow coming to the upside, but we're not at support yet. So we want to see these continue to build as we're developing, coming down into support. Let's check our 15-minute here. 15-minute, no bull divs on the 15-minute. Money flow looks like garbage. It's even starting to come out again here. You guys can see that. Now, on NAMI, we do see some bull divs confirming, and money flow is starting to slowly curve up here. But we want to see, I would want to see another drive of bull div on NAMI because it's quicker. Usually on NAMI, when Market Cipher B has one drive of bull divs, NAMI will have like 3 or 4. So that's the confluence I want to see coming in here. But we also have potentially 1-hour bull divs coming in. Actually, not anymore. Now that hourly candle just closed, or the last hourly candle closed at noon, we do not have bull divs anymore. Money flow is starting to come out. Money flow is coming out. Just does not look good, guys. Bitcoin is really rejecting from some very key levels. And the fact that we back tested that daily level last night and rejected from the daily level, let me go ahead and turn that daily on. This was our fresh daily from the day before that just closed. And you can see after making the low yesterday, we got the NVIDIA earnings. The NVIDIA earnings gave us a little bit of a boost up, but this boost up was to back test your daily level in confluence with the value area low of our entire range of 2025. Now, after losing it locally, when you come back up and back test it, if you reject, you're going to expect some new lows to come in on the chart, some explosive movements to the downside. And that's exactly what's happening here. It is not looking bullish, guys. Now, the same methodology we just talked about, what Kuhns calls the trend and turn methodology, I just would call, I would just look at channels. Like I throw a channel on here. You have your descending channel for your wave 1s and wave 2s. You can see 1, 2, 1, 2. You get your big third wave to the downside. Now, initially, guys, we were looking at this being the low, and we were looking at a 4, 5, 4, 5 a couple days ago on Wednesday. But then yesterday we said, okay, there is a way to count this. The 1, 2, 1, 2, your third wave here, all of this is a sideways 4. This was a 5, this was a 4, and this was another 5. And that's the end of it. But now it's, I have to say this, that has also been invalidated with the new low we got in on the charts. We could be looking at this being a 1 2 1 2 because this has to be a 1 2 1 2. Your third wave could be all of this. And then you could see your 4 5 4 5. And then you could get your relief rally, and you'd be expecting that relief rally to the golden pocket at least of that impulse. So let's just throw it right on top of that box there. You'd be expecting, a move up to backtest 99K, 100K almost. That's these prior lows also. Nice prior lows. So it would be an important support resistance flip as well. So let's see if that happens. We're going to be watching during the stream to see if we can come down to this area of support here. But generally, we're looking for this impulsive move down from 107K. That rejection from 107K. By the way, guys, I warned you about that rejection from 107K before it happened. And really, it was our key anchored VWAP from 107K. So let me see. Where was that? That's the lows. Yeah, that was it. Okay, that rejection there on the bearish backtest. I mean, that was everything we needed to know, because on the daily time frame since April, if you want to maintain a bullish trend and bullish sentiment, you want to maintain making higher highs and higher lows above the anchored VWAP. Well, when we crashed a few Fridays ago, a month ago or so, crashed down, we bounced from that anchored VWAP 3 times. We just took out your dead cat bounce highs, the liquidity, and the day we took that out, I said that was really bearish, because when you have a dead cat bounce after a macro crash like this, you get a dead cat bounce, and a lot of people will short that dead cat bounce to take out the crash lows. So we got a lot of liquidity stepping in. We got that crash down. We did take out the lows. But afterwards, if you see a 3-wave corrective move, and that corrective move just comes out to take out the liquidity from those highs of that range, man, the next time you break down, it could be aggressive. And that's exactly what's happening. It's aggressive here. So that rejection, that breakdown of the anchored VWAP, and then once we broke it down and bearishly backtested it right here, that Monday, that was very, very bearish to see that. It was confirming a possible macro flip of a bullish sentiment since April to now maybe a multi-month bearish sentiment that could be going, through for a few months here. Okay, Mark Dutch, welcome in, man. Thank you so much for being here. I'm losing my bra. Somebody hold my titties up with a pitchfork. Hey, man, pitchforks are amazing tools. They could probably do that as well. But welcome in, Mark Dutch. It's so good to see you. Hope you are doing well in this crazy dump we have. Yeah, they're hanging down to the 786. Hanging down to the 786. Man, that's a pretty big sag there. To the 786. That's like the belly button, right? Put on them red panties. It's bear season. You are right, Andy. Put on those bear panties, guys. Was it a nightmare, Trader NZ? It wasn't a nightmare for me to get it, but I just transferred USDT into it. So for me, it wasn't a nightmare to transfer money into, or funds into BYDFI. But I'm sorry if that was, but thank you for signing up. I just appreciate the support, man. And thank you so much. I think it's a win-win for all of us, because you guys can get deposit bonuses. You guys can get discounts on trading fees. And all I get from that is I get a small percentage of the trading fees that you'd be giving to BYDFI anyways. They just give me a portion of those trading fees. So outside of that, I'm not getting paid from BYDFI. It's just, it's a win-win. It's a way to help the community. It's a way to, kind of build a platform for us to grow on. So thank you guys for doing that. Appreciate that, Trader NZ. Yes, guys, Nami, thank you. R Pink posted the link to Nami. If you want to get that link to Nami, Divine 50 is the discount code. So thank you so much for that, R Pink. Volume is better when I'm closer to the mic. Okay, I will try to keep that in mind and stay closer to the mic. There we go. So looks sussy. I'm sorry, guys. The thing is, I know why you're saying the volume goes lower, because I move around a lot while I'm talking, or I'm looking at 2 different screens. My face is turned one way or the other. So that's probably why the volume is a little bit low sometimes. But I'm going to try to pay attention and be conscious of staying close to the mic. Roy, welcome in. Thank you for being here. And Machi HK, you guys, Machi HK he sent me a DM of a chart from earlier today. I think it's a pretty interesting chart. And this is this is the chart that he sent me here. And we are breaking down, and he's looking at potentially even coming all the way down to these bear market lows, the anchored VWAP from the bear market lows coming in. Let's see, I can't really read that where that's coming in, but we can look at that. But you can see he's talking about the Japanese yen carry trade unwinding right as we were crashed right at the support of that value area low and that anchored VWAP from yesterday. So, of course, black swan events kind of happening right as we're at key support. You're going to break through that support. But yeah, I mean, we're dumping here. We're dumping. We're losing very key support levels. It's not looking good. Okay. Not a nightmare for your trade. Yeah, Machi HK's been short from the top quite a bit on ETH, on Bitcoin. He's doing really well. Machi HK, you're a great trader. So thank you for being part of the community. Appreciate you sending me that and just being here. Do you use VWAP on Market Cipher B as an indication too? If so, do you use it to confirm your bias? Now, are you talking about the VWAP for Market Cipher? Oh, wait, you said Market Cipher B. Yes, I do look at the VWAP for Market Cipher B, but I'm not looking primarily at it like for divergences. I'm not going to be looking like lower lows here, higher lows on the VWAP here. I guess you could look at that as divergences, but yeah, when that VWAP starts to turn around, you can look at, hey, momentum is starting to shift, and you can start to look for that reversal as well. But you can see a few days ago, the VWAP bottomed out, and it was on the day of the big crash from last Friday. We just got a small move up, and the VWAP's been moving up ever since. We're still crashing really hard here. So for me, the VWAP, I will look at it, but primarily money flow and momentum is the two primary tools that I do look at there. Ryzen BTC, thank you so much, man. Welcome in. It's good to see you here. Listen, guys, trading is just about mapping out the levels and being prepared to wait to get to your levels and looking at, once you get to those levels, do you have confirmation to enter or not? So it's about discipline as well. You also don't have to be a slave to the charts. You can set alerts and go enjoy your day, go do other things that you need to do. And once it gets to those alerts, then you can, chime in on the charts real quick. Decide whether you want to take a trade or not. But a lot of people lose from over trading as well. They feel like they always need to be in this position. They feel like they need to scalp every little move in the market. And when you do that, if you're not 100%, you can really end up screwing yourself in some ways. So yeah, trading is definitely a game of psychology. Baby Genius, welcome in. Also, guys, just FYI, the exchange will be getting a little bit of C's for the rest. A little bit of C's for the rest of partnership. So you might as well use the affiliate link to support, just in case you didn't know. Yeah. Yes, Baby Genius, thank you for that. The fees. So we will be getting a little bit of the fees. Yes, you guys will also get some of those fees back. So if you do use BYDFI, I really just think it's such a win-win scenario for all of us. And to me, it's a great exchange. The user interface is so good. It's smooth. The order books are full. It's great. False Prophet says MCV VWAP is the difference between the two blue waves. It's the difference between the two blue waves. Oh, interesting. Okay. Very interesting. Now, False Prophet, do you have you don't have the VWAP on here, do you? I don't think. But you guys, False Prophet, just by the way, when you purchase NAMI Trading, this is not the only thing you get with NAMI Trading. You get a bunch of other tools like NAMI SMC Pro. It will show you breaker blocks. It will show you order blocks. It will show you so many different things that you can look at, like liquidation levels and stuff like that. So fair value gaps, you can see it will show you fair value gaps that you got in here. I don't know if you guys can see that on the screen, but this tool is such an amazing tool to use. And if you get the good full package with it, it's just so amazing. And you can also see NAMI D is pretty much like Market Cipher B, but it's showing you Market Cipher A, and the bottom NAMI one up on the charts. It's showing you like the bull divs on the charts. It's showing you when you confirm and print a bull divs. It's also showing you those trends as well. So To me, it's really, really good tool to have in your arsenal. Now, remember, always, 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 at least with me, guys, the price action always comes first. Price action first, indicator second. So, what do I mean by that? I mean, mark out your levels. You find your levels with whatever strategy you have, whether that's channels and pitchforks, whether that's smart money concepts, order blocks, Fibonacci, all these different things. Whatever you use to find that confluence, you want to look for the confluence of support and resistance. Mark those out. And once you get to those levels, that's when you come down to your indicators second and you look for your confirmations to enter or not enter the trade. So for me, we know that this support box below us between really 84.9K and 84.4K is support because we have a naked weekly point of control in there, because we have a naked monthly point of control in there, and because we have our 1.618 Fibonacci extinction in there. And that's why I'm looking at this. There's confluence in here. And even if we wanted to raise this box and expand it a little bit, we could even include the 786, which is at 85.5. You could say this is your next big box of support because there's a confluence of levels in here. Now, once we come down to those levels, you're going to zoom in on the chart and you're going to look for, are we seeing bull divs as we come down to those levels? You can see here we are making lower lows on the chart. Now, if we continue to come down to hit this box of support, do we see bull divs? Well, look at lower low, lower low, lower low, lower low, 4 lower lows. Higher low, higher low, higher low, higher low. Now, money flow has looked pretty bad, but now it's finally starting to come up here. So we are getting confirmation on the 2-hour time frame if we come into the support to look for some nice bull divs. Also, if we look at NAMI, we had some nice bull divs running. Now, today's low, because NAMI is a bit quicker, this momentum wave has kind of invalidated this set of bull divs here. But now we can go on to the 4-hour time frame and we can look at NAMI on the 4-hour time frame to see if NAMI has 4-hour bull divs, because it does confirm faster. And look at this on NAMI on the 4-hour. Lower low, lower low, lower low, lower low, higher low, higher low, higher low, higher low. Money flow coming up consistently here. So we are seeing the confirmations to look for a potential long position from this support level, or at least to take profit on your short position. I do have to say this. Market Cipher B, I do like Market Cipher B's money flow, even though it's not based technically on money flow. And look at how aggressively the money flow is leaving on the 4-hour. And I have said this over and over in my channel. Super bearish money flow like this will overpower bull divs, and especially a single drive. Now we have multiple drives of bull divs here. One, two, one drive, two drive, three drives of bull div here, triple or quadruple bull div there. But money flow is still bearish. So what we want to see is we want to see that money flow at least starting to round off here, and that last momentum wave starting to round off, and that could give you your nice signal. Now on NAMI, because NAMI is quicker, we're already seeing that last momentum wave start to get the green dot and potentially bottom. But if we look at the money flow here, you can see money flow starting to leave again, and we want to see it start to round off too and continue to build bull divs on money flow as well. So if we can build the bull divs on money flow and momentum here, that is looking really nice to look for a potential long position from our support levels, which it does look like we're setting up for a potential long from this general area. And now I'm going to take that long, guys, because we've been in such an aggressive downtrend. You have to play this long as a scalp position at first. So say we do come down here, we hit, let's say, the naked monthly point of control at 84.9. We hit into that naked monthly point of control. You long upon the reclaim of 85 or whatever. Let's just say you long upon the reclaim of the 786 at 85.5. Your stop is going to go below that 84.9 lows. And for me, I would be targeting, because it would look like this impulse from 107K could be over, I would be targeting that golden pocket up there. That's almost a 14-to-1 risk reward ratio, but that's going to be like my final TP. My first TP would probably be taking out the highs from yesterday, because we still can't even take out the highs. Look at, had a high, we couldn't come out and take out the high, couldn't come take out the high, so we keep making lower lows and lower highs. And if you really want to play this bearishly and think the bear trend is really going to continue, then what you would be doing is pulling a golden pocket from the highs from yesterday to wherever those lows are going to be, and you'd want to take profit around the first golden pocket. And that would at least be a TP1 for me. Of TP1 of maybe 25%, just to lock in some profit in case you get stopped out. Move your stop loss to break even, and at least now it's a small win there. Okay, uh, took the words out of my mouth. Okay, what did my HK say? NAMI VWAP is the distance. Yeah, NAMI VWAP is the distance of current price from real VWAP. Oh, okay. Yeah, there we go. Current price. So you guys see the VWAP. Let me zoom in here. On the VWAP, you can see we're getting far away from it right now. And generally, the VWAP, especially if it's set to session VWAP or the daily VWAP, when you start to aggressively pull away from it, you will generally come back to it and bounce. You don't stay pulled away from it for too long. So once we get down to the support, we're expecting at least a move to bounce up to touch that VWAP. Now, in a bearish trend, you'll reject from that VWAP and you'll continue on your downtrend. So for day traders or for scalp traders, now that we're pulling away from the VWAP pretty aggressively, if you get a long position in here, they would be looking at taking some profit on their scalp long position at that VWAP. And I personally would be too. Okay. I send you the same chart on the weekly time frame, so it shows where I pulled the bear market anchored low VWAP. Yeah, let me see. I also have that anchored VWAP, that bear market anchored VWAP on my charts. Let me look in my macro stuff. So it is 49K anchored VWAP. No, I have it on one of my charts, the anchored VWAP from the actual bear market lows, but I pulled mine. If we just go to Coinbase here, Coinbase chart, just from that low, this low here on Coinbase for me. So that's going to be coming in around 55K, which is a nice, actually pretty nice level. We have a weekly level down there at 55K. Let's turn off these naked weeklies and the naked monthlies. And let me check out Machi's charts. Yeah, okay, so you're pulling it pretty much from the same exact area there. And I can't tell what that read says there, but yep, cool. All right, and look at AVAX. I think we were going for 8. Okay, yeah, we can look at AVAX too. Let's get into some of the altcoins really quickly. I'll set an alert on Bitcoin. Let me just do this really quickly here. I want to set that 786 up real quick, and then we'll set an alert on that. At 85,522. I know there's probably a more efficient way to do this, but I am just going to do that. There we go. Okay, so we're set at right before that 786, so we can come back and look at that. David Brumlow, welcome in, man. Good to see you in here. Yeah, Mind Tapestry, don't move around, stay still. I understand. I'm sorry. It's harder than it looks. I promise. Man. Yes, I'm sorry, guys. I really am sorry with the mic. By the way, the thing is, I have a really good mic. I have a Shure XLR microphone, a whole XLR setup on my microphone, and it's a Shure microphone, which is one of the best podcast microphones you can get. Okay. In settings, you can amplify the VWAP line on NAMI so you can see it better. You've been taking scalp long profits, David, with heavy profit, scalp long with profits between the 382 and the 0.5. Yep, that's a good strategy in a aggressive downtrend. Okay, let's go into Turbo real quickly. We'll go into AVAX. We'll go into the other coins. I forget what they were. Turbo, let's see. Do I have... Man, I guess I haven't looked at Turbo. I'll use the Bybit chart. Geez, pretty much at all-time lows, at least on the Bybit chart. I mean, you could be looking at your range that you have here. You kind of have a sideways range. It is for a majority of the life of the coin, but I would be looking at that range. Obviously, we're breaking down from that range right now, breaking down below the value area low of the range. We can pull an aggressive pitchfork here and look at your pitchfork levels. Let me zoom in onto the daily. First, we'll mark out that weekly resistance. Yeah, I would look at least coming down to this, touch the bottom of the pitchfork band again, or the lower band again. And because we bounced twice from the top of the lower band, we might come down to the bottom of the lower band here, 0035 ish, let's say. And we could even drop to the bottom of the pitchfork, 0002. The thing is, this is just in a heavy downtrend, and you can see all these wicks to the upside. What this tells me, huge wick to the upside. Every time it gets a pump, you're getting people selling off into those pumps. So very bearish momentum here. All these wicks in here, all this here. Looks like you are having bag holders sell off any chance they get. Any sort of rise it gets, there's a sell off. I would wait personally. If you're looking to even buy this on spot, I would start to wait for some sort of sideways range to form. Like, what's the point in trying to catch a knife here if it's going to drop another 50% or so? So start waiting for a sideways range to form, and then once you take out the lows of the range, maybe you can look for a long or a spot buy near the lows of the range. But yeah, we do have some slight bull divs on the chart. You can see lower lows on the price action, higher lows here. Your money flow is start attempting to bottom out here, and you have regional bull divs here between this low, this last major low, and this low. But I would be looking at least to come down to touch your pitchfork band. And if we're looking at that would be, somewhere around 0037 to, and the bottom of it, let's say 0034 or 35 ish. Yeah, there's not much really telling me that this is gonna slow down before getting down there. Okay, is that better, guys, on the mic? I mean, I have it turned up pretty much all the way, but I don't want it clipping on me. The clipping, yeah, see, and Mark says quit swallowing the mic. So here's the thing, guys. If I turn up the mic really loud because some of you guys are having mic problems, it's going to start clipping on me. And if I stand too close to it with the mic there, it'll start clipping. But if I turn it down and it doesn't clip, you guys can't hear it. So I'll try to figure something out with this mic. The software I was using kept pooping out on me on the stream, so I stopped using that software. But when I did use that software, it worked really well as far as the mic sound. Okay, let's go into AVAX real quick here. AVAX USD. So AVAX is at the bottom of our channel again, guys, but I'm still looking for it potentially to come down to $13. And here's the thing with AVAX. We had the initial crash, and the crash on Coinbase only went to like $17. You can see here $17. Now on Bybit, it crashed all the way down to $8. Look at this, like $8.50. So, but since that crash, we've been in a very nice descending channel here. I'm going to hide the pitchfork real quick so you get a chance to look at this. But you can see the bottom of the pitchfork's coming in at $13. And also, I did say that I said this last stream that we looked at this, we could just be grinding in this descending channel here until we get to the bottom of the pitchfork. So we've just been grinding in a descending channel. A little bit of a fake out here, but really just grinding within the descending channel. We're at the bottom of the channel again. We could get a small bounce from here, but I would expect us, even if we get a small bounce from here, probably just a three-wave corrective move, reject from the midline, come back down, and then by then you're at your $13 pitchfork lows. Let's see, bearish pitchfork. Here we go. So yeah, those lows. So I would be looking, and those lows are going to line up with the bottom of the channel next Tuesday. So we might keep getting a sideways and down grind until next Tuesday, but $13 is looking like a decent spot for me to look for a potential long position. Now, Machi HK thinks we're going to go to 8. I mean, that is pretty aggressive. And the way we've been moving down like this, this does look more corrective now after the big initial dump. And we could be just coming down. Let's just do this. Let's look at our golden pocket of the buy bit low to our dead cat bounce highs. And we'll turn that on log scale because that's more than a 100% move. Yeah, and see 1260, $13. That's going to be generally around that general area, and that's where we could be looking for a bounce there. But overall, if we go back to the Coinbase chart here, overall, I am just looking. I think that's an order block down there we have. Yeah, we have a little order block down there and the bottom of the pitchfork. And we might just keep continuing to grind down until we hit that. We rejected from the upper band, which was also your log golden pocket. Yeah. There's not too much else though below that, guys. Like $13. If we don't hold $13, we can look at this accumulation range in here. Yeah, I'd say 13 to 1260. Look at the value area low of this range is at 1260, which is where that Bybit log golden pocket is. So $13 to 1260. I would look for at least some sort of bounce. Now that bounce might be result in a lower high before coming down to $8. But I do think we're going to bounce from the bottom of the pitchfork. We might get a rise to backtest $17, which was the Coinbase low, and then we might break down here. Okay. Yes, I just moved my head too much. I'm sorry, guys. Tape it to your chin. That's a good idea, actually. Or I could get one of those mics that is the earphone mics. Yeah, I did turn the volume down a little bit. Let me just, guys, give me 1 second here. I'm just going to look at starting up this software. I'm going to mute myself. Give me just a second, guys. All right, I'm going to have to look at that a little bit later. Have you tried to turn it on and off? Check 1 2. Can you guys hear me? Okay. Okay, sorry about that, guys. I think you should be able to hear me. Okay, forget ADA. Let's check Cardano. Yeah, let's screw ADA. I'm gonna check Cardano, guys. ADA sucks. Okay, ADA. Oh, and I will go through. There was another one someone wanted me to go through. Please repost that. We did AVAX. We did Turbo. ETH. We'll go through ETH as well. Gosh, Cardano is losing its macro golden pocket at 50 cents. And yeah, that was pulled from this low here. So let's pull this golden pocket, this macro log golden pocket from the bear market low up to our cycle highs of this cycle. We're coming down into our macro logarithmic golden pocket right now. That's pretty key. We lost this upper range, of course. This upper range is kind of lost. And let me get rid of this channel. Let's get rid of this little range. Yeah, so guys, we are coming into that macro logarithmic golden pocket. Now, this bottoming range here, this accumulation range, you could pull it, to here even. Man, yeah, this accumulation range, we lost the 50 cent value area high, which was the golden pocket when it was pulled from this low here. You can see that value area high was right at that golden pocket. We really didn't want to lose that, but we are losing it. So now we can go to the next macro golden pocket, and we are in golden pocket support right now. The only problem is there's nothing really in here. Look at this on the daily time frame. Quick move up through this, and so you can do a quick move down through it as well because there's nothing really in here. I'm sure if we zoom in on some of the lower time frames, there's some sort of order blocks in there. And then if we even look at this last small little range in here, yeah, value area high is going to be in there. We could even look at this sideways. I would say we're at some local support right now. You can see we're actually touching the value area high perfectly. So but I like this monthly down here. You can see this monthly is around your range point of control. And it's also going to be your 786, your macro 786 Fibonacci. Let's look at yeah, I would say that general area does look pretty good between the 1-to-1 and the 1.236. If we're looking at a bigger corrective move in here before now trying to make another move up, between the 1-to-1 and the 1.236, and with that monthly and that 786 around 34 cents, 33 cents, that's a pretty good area to be looking. The bearish part of all of this is, remember a long time ago we were looking at this as possibly a 1-2 1-2, and you could be in your third wave here. And if your third wave is going to end at this golden pocket, you might be able to see a 4 5 4 5, but you might bounce from this golden pocket just to make another lower high before ultimately coming down to the 786 and the monthly level. So in that case, let's see. Yeah, and this is a bit tough too to find. I'm sure if we zoomed in, we could look at 5-wave impulses in both of these. That's your wave 1. Yeah, we could be looking at this third wave not even being done yet. This guy in here, it might come a little bit lower. Then we're going to see our 4-5s come in. I will say this. You're at your macro logarithmic golden pocket, pulled from the bear market lows to this cycle's highs. You would expect some sort of reaction from this area, some sort of reaction. Now, we do have bull divs on the daily time frame, very slight bull divs on the daily time frame, and your money flow is starting to bottom off on Market Cipher B there. NAMI, the money flow still looks pretty bearish. And remember, because NAMI is quicker, we want NAMI's money flow to already start be curving up. It looks a bit iffy to me. Yeah, we might just continue to grind kind of in this channel-y structure here. Money flow looks really bearish on the 4-hour, but we are getting those nice 4-hour bull divs. You can see multiple drives of it. 1, 2, 3, 4, 5 potential drives of it. We want this money flow to start rounding off. And on on NAMI, we do have very local between yesterday's lows and today's lows. We do have bull divs here, but money flow is leaving locally also. Man, it does look nice. It looks like what I would do if I was trading this personally, because we're at a macro logarithmic golden pocket, and that generally is a pretty nice area to look for a bounce. What I would be doing is waiting for a range, though. Like, I'm not going to try to knife catch this descending channel. Now, say we bounce here and we start to range inside of this golden pocket for a bit before seeing a push up. I would look to wait till the sideways range starts to develop and try to get towards the bottom of one of those ranges. Pull your volume profile there. Look at the value area low. Look at any naked daily points of controls within that. We can actually zoom out on the daily and we can look at naked monthly points of controls here. Yeah, we don't have any naked monthly points of controls until we get down to 24 cents, 25 cents, really. Man, this market is just brutal right now. Okay. Yeah, if Mach HK, I agree with you. If AVAX doesn't hold 13, we are likely to go down to 8. Now, I'm not saying it's going to be a straight drop like it has been the past couple of weeks. We'll probably get some bounces along the way, but yeah, it is probably going to be pretty bad. So, see, nonsense. I think this new name is you. I see you have the same tag there. 1Vin7. You say for you, audio has been good. Now, when I go back and listen to the live streams or listen to the videos on my phone or on my computer afterwards, it does sound like the volume is at a good level and it does sound like it's consistent as well. So I'm not sure what the deal is with some people having audio issues, but I really apologize for that, guys. I'm going to look at resetting up that software again, maybe, trying a new update or maybe undoing an update because maybe one of those updates was causing it to crash, but I'll fix it. I'll fix it for you guys because I want to have good audio for the streams. Cardano holders are getting poorer and poorer. Yeah, and gosh, Cardano's had a rough run at things, guys. Very rough run. What I would say, okay, on Cardano, we had this bottoming range in here, and then we had this upper range in here. But now that we're starting to re-enter back within your old range, you can see those were the lows at like 50 cents. Now we're starting to re-enter back within your old range. What you can do as well now is take this initial range and expand it all the way to current price action. And now you can look at this volume profile because you can merge them kind of into one bigger volume profile. And sure enough, look where your point of control is at. Your point of control is going to be right at the top of that box. And I believe that was your 786 of this guy. Let me get it there if I can get it there. Yeah, your 786 is going to be in there. 786 monthly level, point of control of the range. Interesting. Okay. So we can look at this one of two ways because this was clearly impulsive price action to the downside. And once your impulse ends at the low, you start to form that sideways range in here. So you could pull that volume profile because remember, it's a fixed range volume profile. You're trying to measure the volume of a range. Now, this has kind of been an ascending channel range in here that's breaking down. But if you take the volume profile that way, your point of control is coming right where your one-to-one correction is. And if this is going to be a more complex zigzag correction, three-wave corrective move, that one-to-one around 39 cents is where your point of control would be. You can also see in here, this big gap in the volume profile means there's not a lot of volume. So you're likely to fall straight through it and come down to that POC. So I would say just pay attention to that like 39-cent level. We could get a bounce from around 39. If we lose 39, we're going to come to like 34 cents. Let's just say that. 39 cents, 34 cents are the levels to be looking. Of course, right now you're at a level as well. You're at your macro logarithmic golden pocket. Let me just take this and we'll turn that to the 786 only, and we'll put that on log scale. And then we'll pull that macro. If I can get it. Dang it. So 39, 34. Okay, ETH, guys, let's look at ETH. And I did want to check out the total market cap as well. Ethereum, I still think it's coming down to 27.21. Pretty much, we did reject the highs of the pitchfork. We were attempting to hold our upper band. You can see this upper band in here. We were attempting to hold it. We lost it. We back tested the bottom part of the lower band, but it was also the back test of your macro value area high on Coinbase. Now you can see the value area high on Coinbase was at 3,600. On Bybit, that same value area high is at 3,200. So it's $400 lower. But either way, you're losing it. And we can look at both of these pitchforks. You can see we're losing our pitchfork midline in here. Let me just hide this box real quick. We're losing our pitchfork midline, and I mean, 2,700, and if we lose that, 2,400. We're going to come down to 2,400-ish. We do have a bunch of levels in here. We do have a daily level at 2,800. Now, that daily level, there's not much else around there. Actually, we've already tapped it today. We're bouncing from it today, the daily level. And actually, that's not even a fresh daily level. I don't know why that's there. Yeah, sorry about that. That shouldn't have been there. So 2,500 is your next daily level. But this is your macro 786 in confluence with the pitchfork midline. And we rejected from the top of the pitchfork. So that midline is going to be pretty interesting there. We busted through that naked weekly at 33,000. That was the swing failure pattern we were looking at last week of the crash lows. So we can get rid of that. That's no longer. And it does look like we are hitting a naked daily point of control. That's where we're bouncing from, is a naked daily point of control right now at 28.43. But you can see our next naked daily is going to be at 26.65. But I'm looking around this box here. 786, you can see it's the value area high of your previous range is around there. In terms of pitchfork trading, rejected the top of the pitchfork. We formed that distribution range up here. And by the way, I was showing this to you guys before it happened, but you can see here as the range was forming on the daily time frame, we had our higher highs in the price action, our lower highs in the momentum waves. Now, once our money flow topped out on that all-time high, that was the grab of the all-time high, money flow topped out there. After that, we developed new trigger waves, but money flow was consistently draining out of the asset as the range was forming. And look at on that second cross into the red, that's when we really started that aggressive downtrend. So distribution down, in other words, this range distributed down. I expect some sort of bounce from there, even if it's to create a lower high before coming lower. But that 27.21 is your macro 786. Value area highs close by, and your pitchforks right there. We have very slight bull divs on Market Cipher B, and the money flow does look like it's starting to bottom out. NAMI has potential bull divs on the daily, but those could probably be invalidated after the close today. Unfortunately, they're probably going to be invalidated after the close today. The fact that we've fallen back inside the volume profile, we broke above it, back tested, made new all-time highs, but we came down for a bullish back test. If we would have bounced here, remember that was right where we were looking for the fifth wave as well. We were looking for a 1, 2, 3, 4, 5 to come up to 6K. But now that we've invalidated it, we have to look at this as a bigger three-wave corrective move, taking out the all-time highs, and now we could be coming all the way back down. So we can also look at pulling our golden pocket, our macro golden pocket from the lows at 1400 pretty much to our all-time high. Let me fix that. And we're going to look at the golden pocket, but here's the thing, because that's more than a 100% move to the upside, that is not a proper 61% retracement. You can see that from here to here is not 61%. This is larger. You can see that line is larger. So in order to get a proper 61% retracement, you're on log scale, you have to come in here and you have to click based off log scale. And that's going to give you your proper 61. That's about 2200. And that is a very key level down there. We have some liquidity resting right below it. And just that, you have a daily level down there. Yeah, I would say your non-log golden pocket is in confluence with our level that we're looking at right now. 2700-ish. 2750. Either way, we're looking 2700 is like kind of the level that we're looking at. This guy right in here. 786 Fibonacci pulled from this low to the highs, and it's your golden pocket, your non-log golden pocket, which is improper, but it's a lot of people don't know the log change setting, and they just will look at this golden pocket. Either way, look at prior value area highs up there, your range value area highs up there. Okay, and then let's see. Do we have any naked monthlies? No. Man, yeah, this thing is just not a lot of support until we get down to that area. And quick move up through all of this, we're going to move down through it pretty quickly. Which coin do I like trading the most besides Bitcoin and Ethereum? Solana. For me, nonsense, it's Solana. And I don't know, I've just always been good trading Solana. For me, Solana's always been a moneymaker for me. I love trading it. I've had some of my best trades off of Solana. And yeah, that's the one. I also do like trading Chainlink, but I like coins with high liquidity. Like I don't like to trade a lot like Turbo and these other coins like that. Nothing against people that do at all. Like if you can make money trading it, trade it. But I do like trading Solana a lot. And Solana, I'm looking for it to come down to like 126. We're looking at coming down to the value area low of our 2-year long range. You can see this goes back to March of 2024, so it's almost 2 years long. And you can see the value area low, and then we have the liquidity grab right down there. We do have a monthly down here, the pitchfork band. We're trading in the pitchfork band right now, and your logarithmic golden pocket. Oh, actually. Yeah, that logarithmic golden pocket was there from before we made a new high. I think it was from this high. Okay, here's the thing, guys. We might see a bounce from where we're at right now on Solana, excuse me, because we're at the log golden pocket. The wicks passed it on the daily. I don't like that. Multiple wicks passed it on the daily time frame. Coming down to the value area low looks a little bit better for me because you can see that value area low is going to be right at the bottom of the pitchfork band, 127. But knowing that you have liquidity at 126, you might just wick past it just a little bit to hit that liquidity at 126. So if you see an SFP of 126 and you get back above 127, that could be an awesome long position. Yeah, your monthly's at 124.5. And we're hitting a weekly level right now. It's also going to be a daily level. So you're hitting a weekly and a daily. But I would be looking just a little bit lower, especially if Bitcoin's going to dump a little bit lower, the rest of these coins are going to follow. But this is where I'd be looking. I'm going to move that box up a little bit. So there, and then where was that monthly at? 124.5. So I would move it there. So between 127.25 and 124.5. Liquidity grab. It's going to be the bottom of the pitchfork band, which would be really nice to hit. The thing is, we lost our range point of control at 144. And then look at how many times. Let me go in on lower time frames, but we've back tested it like 5 times since losing that point of control. Look at that. Look how it's holding now as resistance. But we are starting to form a bottoming range here. See how it's now starting to go sideways? So we lost the point of control. Back test once, twice, 3 times. I'm going to say 4 times, 5 times, 6 times, 7 times. Now we've taken out, also with yesterday, we took out the range highs. So we're starting to form a sideways range on Solana. Look at yesterday. We took out the range highs, or we double topped. Did we take them out? Yeah, we touched them, but I would say not enough for a nice liquidity grab. But let's just say we came out, we took out the range highs. Now we have some range lows down below us. We could come down now, take out the range lows, take the liquidity of the main low, still stay relatively within a sideways range here, and then get that bigger bounce to the upside. And of course, you have a lot of semi-equal highs up here you could sweep, because people, let's be real, people don't set their stop losses right above that level. They give it a little bit of breathing room. You could just be trading this range though. Trade this sideways range. You could even pull this to like right here when we break it down. Yeah, you're losing your range value area low today, and look at, after losing the value area low, back testing, and if we reject here, we can at least expect to come down a little bit lower and at least take out these lows into the pitchfork band. $130. But I really would be looking to come down just a little bit lower, 127, 126. Okay, let's see here. Yeah, Cardano, man. Gosh, Cardano holders. I have a little bit of Cardano, but not much. Okay. Yeah, guys, please hit the like button. If you got any sort of insight into the market from this video today, please hit the like button. Also, remember, you can join the Telegram. The link is in the description to join the Telegram. All you have to do to join the Telegram is register with BYDFI using my affiliate link and deposit $100 into the exchange. You'll get a 50% deposit bonus and 20% discounts on trading fees. Once you do that, you can click the Telegram link and type in /verify in your user ID, which will be right up here. And that'll get you access to that Telegram community where I do post my thoughts on the market and some trade setups every once in a while. I'm going to get more into posting altcoin trade setups too once we start to see some signs of relief on this drop. But you don't want to be trying to knife catch these aggressive moves down. So once we start to see some sign of strength, we can start looking for some longs on some of the alts. Sound is perfect. Okay, cool. I'm sure your mic is good. Just don't move. Yeah, okay. I won't move around, guys. I'm sorry. Massey33, welcome in, man. Welcome in. Dr. X, you too. Welcome in. Sound is low. I have all on maximum and volume is low. Huh. That's so weird. I'm gonna switch back to that software tomorrow. And I will be live streaming tomorrow as well, guys, at 2 p.m. Eastern Standard Time. So by then, I will have it hopefully fixed. I'm going to go look through this later today and try to get this worked out for us. Okay, Link has a very predictable ranges. Yeah, Chainlink as well. Now, guys, Chainlink, we are at the $13 lows. We lost the pitchfork, though, and that's concerning for me. Let's go zoom out to the daily chart. You know, at 12.5, we have the 786 Fibonacci. Let me get rid of this real quick. So that 786 Fibonacci is from our last major weekly lows in April up to your lower highs at $27. Now, if you want to look at, you can also pull a log golden pocket from the bear market lows to your highs. Let me get that on there. And that log golden pocket is at 12.5 anyways. So the next level, and we're hitting the 618 right now. Actually, you can see that we're hitting the 618 of the log golden pocket right now. But I would want to come just a little bit lower. Bitcoin's going to drop a little bit lower, so is Chainlink. But I am expecting some reversals from some of these soon. Look at bull divs here. Money flow is actually starting to bottom out on Chainlink and starting to curve to the upside here. Nami could have potential bull divs on the daily as well. So if we come down to like the 12.55, 12.56, that would be really nice because that's right where your 0.65 is in confluence with that 786. And it would also grab the liquidity of this little cluster of, this little liquidity cluster right before this big impulse. So a lot of people that would long at the, the breakout of this, they would probably put their stops below these lows. And so coming down to 12.5 would grab all those stops out, and you're in macro support there. Now, if you lose 12.5, you're going to come down to the value area low, which is resting at 11.5. You lose that, you're coming down to $10, really. Now, there is some levels in between. I mean, we do have a monthly level. Okay, looks like we busted through the monthly at 13.3. Weekly, we also busted through the weekly at 13.5. But we have that weekly right in along that value area low. That's your next guy, but we're in one right now. And we're also touching a daily right now at 12.9. But look at, you also have a daily in here. So you have a weekly, a daily, and the value area low. Naked monthly POC is at 12.6. So guys, we are at support. I would like to come just a little bit lower. Look at, even coming to that naked monthly at 12.6, you would be stopping out that liquidity cluster, all of this liquidity in here. So naked monthly point of control, 12.6. And no naked weeklies. We also have a naked daily down right on top of that weekly. So if I turn on our weeklies, you can see at 11.6, 11.7, value area low, weekly, naked daily point of control. I mean, it just looks good. The two levels I'm looking right now is really like 12.6 to like 12.4, and then 11.7 to 11.5. And then if you lose that, you're probably going to come down to $10. Okay. A new prostate emoji. Bent over USDT. I wonder if that's a real coin. I bet you it is. Dang it. You know what, Mark? You need to make that. Bend over USDT. And everyone could long it for the bear market that we're about to see. BTC is forming a bear flag. Okay, we're going to go looking back to BTC right now. Can you teach us how to set up those levels in POC daily, weekly? Yes, I can. DAP passive 8636. So here's what you're going to want to do. Let me get onto a fresh chart of a fresh coin. Let's go to Bitcoin here. Let me do a chart that I don't use a lot. This MEXC chart. So in order to look for first of all, you're on the monthly time frame. Go to the monthly time frame. And you're going to look for the candle close and open in the same spot. So you can see this green candle closed here, and the next month it opened red in the same exact area where they're together like this. That's going to be a monthly resistance level. So you'd use your magnet, mark it out there, and you can have a template. You can come down, mark out your monthly level, and that's now a monthly level there. The same thing on the weekly. And also look at, we have a monthly level right here, right? There's your two monthly levels that you're looking at. That's monthly support. That's monthly resistance. Now, on the weekly time frame, you're going to do the same exact thing. So if we look here, I see a fresh weekly right up here. I see a fresh weekly right here because this weekly hasn't been tapped since we've been dropping since then. So it hasn't been tested since it's been made. You only want to do fresh ones. Like look at this weekly here. We busted straight through it. So this was a weekly level that we busted straight through. You want to take it off the chart once you bust through it. And then our weekly support on Bitcoin is 78K down there. So you'd mark out your weeklies, right? Now we have our monthlies and our weeklies marked out. This is a monthly. Then you could do the same thing on the daily time frame. Okay, what did we reject from earlier today? See, yesterday we confirmed a daily resistance. You see that daily resistance at 92,900? Well, now if we zoom in on the chart, where did Bitcoin pump to? After NVIDIA earnings, we pumped straight up to that daily, we rejected, and now we're coming down. So, but it's just the same thing. You're marking out where the candle body open and closes together. So our next daily support level, you're going to have to come over here on the chart. Let's see, that daily right there has been wicked out already. So that daily hasn't been touched. So we can mark out that daily there. Open and close there at 83.6 is the daily level. You can mark them with different colors. I use blue for dailies, light blue for monthlies, orange for weeklies, whatever you want to do there. That's how you mark out your time frame levels. Now, in order to get your NPOCs, you're going to want to use a tool in indicators called PVP, Periodic Volume Profile. So if you just type in Periodic Volume Profile, it's right here. And once you have that, go into your settings. And you're going to look, so you put period 1. First of all, you want to extend your POC right. That's going to give you any naked POCs. It'll extend them right for you. But if you want to look for monthly POCs, you just change this to month, hit OK, you turn it on, and now watch. It's going to populate. So our next naked monthly POC is down at 68K, 68.9. And then if you want to look for naked weeklies, you change it to weeklies. It's going to show you all your naked weeklies. So right now, and this, see how this is going? It's because the week hasn't closed yet. So you never look at the week that you're on until it confirms. So right now, the POC for this week is at 92K pretty much, 91.9. But we're not marking it out yet until the weekly candle closes. But you can see all these POCs have been hit, so none of them are naked. Now, unfortunately, this PVP doesn't go back to naked weeklies down here. So unless you had them marked out from a long time ago and kept them on your chart, you're not going to have them. And you can use ATAS or different footprint charts to find those. But for me, this periodic volume profile works really good. And then, of course, for dailies, you can just go to dailies, mark them out, turn it on. You can see our dailies. Now, of course, we have dailies above us. And yesterday, we confirmed a new naked daily point of control at 91.8. Let's say 91.8-ish. Actually, no, that's today's. I'm sorry. That's today's. But we do have a naked daily point of control at 95.4-ish. So that's how you mark those out. Bitcoin. Come on, Bitcoin. What are you stalling at? I don't like that it's starting to stall here right before touching our support. Yeah, guys, I'm really looking for a bounce soon. I mean, the way that we've been dropping from 107K is very aggressive. We do have our 1.618 at 84.4, pretty much 84,378. And if we're looking at that bigger impulse to the downside, we had our distribution range, right? This was our distribution range. We made a new all-time high, and from that all-time high, we saw an aggressive dump down. That could be your wave 1. This is your wave 2. We're in a wave 3 right now. Now, your wave 3, a common target to end it is at the 1.618. We could see a wave 4 retracing up to like 92.5 to backtest the value area high, to backtest our anchored VWAP again. And then we could see a dump down to maybe 82K to finish it, or maybe, we could continue. The thing is, I think that because we're looking for a bigger flat correction in here to potentially come all the way down to 70K, this third wave, I mean, look at within the third wave, first of all, you're looking, because we have a 1, 2, 1, 2. You're in your third count of the internal third wave. So we're looking, then now we need to see 4, 5, 4, 5. That would be all 1, 2, 3. We'd get a bigger bounce for 4 and then 5. So we could literally come all the way down and take 74K out without even changing market structure bullishly on the daily time frame. Actually, I think that's the highest probability, to be honest. So we'll see how it works out, but this looks impulsive for sure. I mean, look at the volume on this thing. Volume dumping to the downside, increasing here over the past week or so, 2 weeks. And of course, the biggest spike in volume is that black swan event that happened on October 10th. Generally, your largest volume is in your third wave. You want to see volume increasing in that third wave to the downside. Well, we do. And that tells me that this is impulsive price action to the downside, and that this impulse could bring us all the way down to 74 or 70K. Yeah, absolutely, DAP Passive. I hope that helps a little bit for you. 69.8. Yep, that's, dude, same here, Mach HK. And you have your previous value area high there. Like, look at your previous value area high. 69.8. I mean, what more do you want there? Golden pocket, your macro logarithmic golden pocket pulled from the 49K lows up to your all-time high. To me, it just makes sense that we're going to come down there. Now, I'm not saying we're going to do this a straight flush through everything all the way down. You will see bounces along the way, guys. You're going to see a bounce, a relief rally, relief rally, maybe a sideways range. But Bitcoin is coming to support. We're not quite there yet, so be patient. I wouldn't be trying to long right now. We have no sign of strength in here, really. You have very slight bull divs on the 1 hour. Money flow looks bad, though, coming out on NAMI and Market Cypher B on the 1 hour. Yeah, and you're right. 74K to 69 is a void, you guys. Like, there's nothing. Look at from this low to the 70K level. Complete fair value gap. What am I looking for? Complete fair value gap in here. Look at this fair value gap. Nothing in here. So if you enter that, you can flush through it super, super quickly. There's nothing there to keep us from just completely diving. Look at that fair value gap. So if you don't SFP 74K, it's highly likely you're going to drop quickly to 70K, 68K. Because of that daily fair value gap in there. Yes, and you're right. There was no proper retest. Guys, when you usually break out of a range like this, in 2024, we ranged for 8 months, right? Usually when you break out of a range, you back test it before really coming up higher. Now, I know what some of you guys are going to say here is you did back test it. Let me pull this a little bit over more, and you're going to say, yeah, you broke out of it, you back tested it. Let's just do like right here. But you didn't really back test it. You broke out of it. You kind of had a fake out back inside of it, and then you pushed up. But since really breaking that range to the upside, you never came back to back test it. And remember, when our all-time high was at 108, what we were looking for is we were pulling our Fibonacci from the 49K lows up to those 109K highs. Your golden pocket, and that one you don't put on log because it wasn't a 100% move. That's not a 100% move. So, or it's around 100%, but that golden pocket was in that same exact area. And we front ran it with the 74K lows. We front ran it. And if you remember these videos back then, We did bounce from our pitchfork band here, which I said was a possibility, but I wanted lower. I wanted just a little bit lower, and we didn't get it. So value area high in that front run of the golden pocket on the last time. Now we might come down and actually take it and hit into that golden pocket. Buy order for Polkadot at 42 cents. Yeah, Polkadot, man. I don't even know. Man, I haven't checked Polkadot in so long. 42 cents. That's so funny. Yeah, but you know what? It might. I mean, geez. Let's see. I think I have Dot. Was it on Binance? Yeah, I had some stuff on Binance, but I also think it was on Bybit. No. Well, let's use the Coinbase chart. Man, yeah, we rejected from that macro 382. Look at that. Pulled from the highs to the lows of the bear market. You rejected from the 382 pretty much on your bull market highs this time. God, that's pathetic. And now we're going to continue. And that means it's a strong downtrend. That means you're likely to continue down. Money flow leaving again on the weekly time frame. Invalidated the bull divs on the weekly time frame. You could look at this last little channel that you've got here. You're breaking that down too. I'm just looking at primarily this structure. So we could try pulling it to this low. Yeah, I mean, that channel is being respected. Midline respected, midline respected, midline respected, midline, and then now we're coming down to the bottom again. Jeez. Well, money flow does look bad, but you do have bull divs, and it looks like it could be starting to bottom out. I mean, if we're looking at this weekly channel and it's going to stay intact, golden pocket, is that more than a 100% move? I don't think so. 50%. Okay, so now 786 is going to be near the bottom of that channel. No, you're even breaking that. Actually, you're hitting your 886. 886 is at the bottom of the channel. Here's the thing. If we come down and we hit that 886, guys, at the bottom of the channel, you might get a bounce at like 248. Let me make that a different color so you can see it. At 248, you might get a bounce there. But remember, if you hit the 886 in a larger downtrend, then you're more likely to come take out these lows. So you might see something like this. A bounce here just to come back up to the midline before eventually breaking it down and taking out that low. You might start to form a sideways range kind of in this general area. $0.42 though. Yeah. Jeez. I mean, I don't think my chart goes back that. That's definitely an all-time low. It's definitely an all-time low. Yeah, there you go. See, for all the people that were hating on ADA, at least it's better than Polkadot. I would rather have ADA than Polkadot as well. Polkadot is a dead coin. I mean, Cosmos is a layer 0 like Polkadot. Cosmos is much better to me than Polkadot. Adam. Let's check the total market cap chart. I forgot about that. Actually, look at some real TA here. So what we were looking at, guys, yesterday in the video, we were attempting to bounce from our golden pocket area, and we were looking like we were going to bounce from it to at least backtest this pitchfork band. But I did say in yesterday's video, guys, because we did front run this liquidity here, we might see another drop to take out that liquidity and then overall kind of hold a golden pocket and move up to, back test general area up here. If we don't close the daily candle above 2.96 trillion, I do think we're going to come down to the bottom of the pitchfork. And that means more downside for Bitcoin altcoins. Simple as that. Man, this is going to be really bearish, guys. I mean, like, we could be looking at a wave 1, a wave 2, a wave 3 coming all the way down to the bottom, a wave 4, and then a wave 5 here. The thing is, and of course, this wave 4 and wave 5 breaking the pitchfork would confirm a bear market to me as well in some ways. What we could be looking at is inside your wave 3. So obviously this is your wave 1 here. You kind of had like a triangle in a wave 2. I don't generally you don't see triangles in wave 2s. Maybe a running flat here, a running flat correction, and then in your wave 3, you're looking for, all of this being wave 1, wave 2, wave 3. So you still need 4 or 5 within your wave 3. And then you'll get your bigger wave 4 and then your bigger wave 5. But it looks like your third wave impulse is not even done unless you're counting it like this, a 1, 2, 3, 4, and we're in the 5th wave and you're seeing an extended 5th. As long as the third wave's not the shortest, that's okay. But we also want to turn on the volume and look at the volume usually is still higher within the third wave. And actually that is true. So we could look at this as a 5-wave impulse here, with your third wave being this guy right here. Volume is higher than your 5th wave. Even though your 5th wave is longer to the downside, volume is getting lower and lower and lower here. So yeah, that could be the actual count here, is this being your wave 1, wave 2, wave 3, wave 4, and maybe a wave 5 coming all the way down to the bottom. Shuck, jeez. And then the hope in a bull market for the very bullish scenario is you want to see a bigger ABC correction, which your A wave is an impulse to the downside. Oops. Right? Your A wave is an impulse to the downside. Your B wave is a 3-wave corrective move, and your C wave is a 5-wave impulse to the downside. But you should make a higher low, and then you can push back up. That is your kind of hope for the bull market, is that maybe the bottom of this pitchfork holds and we can continue trading in the pitchfork. But this here, I mean, rejected perfect. We didn't come down to test the bottom of the pitchfork, and that was a little bit concerning for me. So we might be coming down to test the bottom of it now. If we look at turning on our 786 as well here. Okay, 786 is below the pitchfork, but you might see a little bit of a wick and then get back in it and like a fake out of the pitchfork, just like we faked out the bottom of the band here, got back in it, flipped it to support. Either way, the fact that we're losing this golden pocket today, if we don't close our daily candle above this level, I didn't mean to do that, then it's bearish to me. Yeah, is it a bear market, man? I have to say, it's looking more likely now. Let me just go back in here and let's turn on that Fibonacci channel. The fact that we're losing our macro Fibonacci channel that has been our macro trend for the entire bull market, the fact that we're losing this channel today, to me, is very bearish, guys. Very bearish, and could be confirming that a bear market is here. 2-day time frame, you can see that this Fibonacci channel has literally been respected. Every major swing position has been respected the entire bull market. And so the fact that we're losing the base of the channel is very concerning to me. And that means we could drop, I mean, at least to 70K, but maybe even down to 55K. We have a weekly down there. And then if we pull our Fibonacci from the bear market lows to our all-time high up here, Now, your non-log golden pocket is coming in there, but look at, guys, once again, this is not, so you have your price action from the all-time high to the golden pocket, and then you have your price action from the lows. Let me just throw it on the lows all the way up to the golden pocket. Now, this looks like a 61% of the move. This looks like 39% of the move, right? So in order for you to get the proper 61% retracement, you have to click this and go on log scale, and it's going to shift it to where it should be. That's your proper retrace a golden pocket. And by the way, I think worst case scenario, 34,000 is the area where we bottom out. I know a lot of people are going to dislike the video just because I even said that. I'm not saying we're going there. I'm saying that's the absolute worst case scenario. But look at that, also happens to be the most important support resistance flip on the entire chart, right? Support, 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 resistance, 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 kind of in this general area. Supports, resistances, and if we come all the way back down there, I'll sell everything I got and buy Bitcoin. I'll sell my Bitcoin and buy Bitcoin. No, just. Yeah, we did cover AVAX. I'm looking for AVAX to come down to 13, steel and stone. Wait, where's that? So, this one. At $13, we have an order block down there, and it's the bottom of our pitchfork. And we also have I believe it was a naked daily point of control. There was something else down there. But you can see we're just grinding within this descending channel. Since the crash ended, we've been grinding within this descending channel. We are at the bottom of the channel now, and we could see a small bounce. And even if we come up to the midline, about 14.65, that was your prior lows, by the way. That was these prior lows at 14.65. So you could now be rejecting from those prior macro lows. Oops. Is that the one? No, it's this one. Sorry. See that 14.65? You could reject from the prior lows and then come down to about $13. If you lose $13, you're going to be in trouble. You do have some support in between other places, but I think 13 is around where we're looking for at least some sort of bounce. Why not log scale all the time? I do log scale all the time. Here's the thing though. Even if you're on log scale all the time with your Fibonacci's, if you're pulling like a Fibonacci, a low time frame Fibonacci here, even this move from 18, like that's kind of a big move there. If you click it on log scale, it's not going to change it much off log, on log. See how it doesn't change it much at all? Because log scale adjusts for the high volatility moves. But like if you're on the hourly time frame, or if you're looking for a small golden pocket and it's less than a 30% move to the downside, less than 30%, you can use a fib without log scale, without clicking that based off log scale. And if it's less than a 100% move to the upside, so if the move to the upside is over 100% on the pump, you want to pull a log golden pocket for the retrace. If it's more than a 30% dump to the downside, you want to switch that the golden pocket to log. And that's the general rule of thumb that works the best. About a year ago. Yeah, it does feel like. Okay, we'll go through SUI real quick. Then I think after that, I'm going to get going, guys. Not a lot is happening right now, and we know what we want. So SUI came down to the 171.5K lows, and we didn't even SFP them. Because remember, we were looking for an SFP of 171 into the bottom of the pitchfork band. We didn't get it. Now we're just dumping, and I do think we're going to come down to the bottom of the pitchfork at this point at like 139, 138. Yeah, there's nothing really, gosh, even the bottom of the pitchfork band, there's nothing really here to keep us. But we did bounce from the pitchfork band. We made a lower high, and now we're breaking down. You can see the midline was holding for a bit. We broke it down. We back tested it, right? Let me get rid of these now because these are no longer going to be. And actually, I would pull this there. Yeah, but we broke the pitchfork midline down. See, it was support, support, support. We lost it. Then we back tested it as resistance right here. By the way, when we lost that as resistance, I said we were at least going to drop to the lower band. We did. Now we're rejecting the value area low of our more macro range, and we're continuing down here. So I think we're going to continue down to the bottom of the pitchfork around 138, but there's not much in here, guys, to keep us from moving up. Look at all of this is quick move up means quick move down, really. What we could look at, gosh, I got to get better at using a computer. I'll tell you that much. Yeah, if we lose the pitchfork, we're coming down to 117 to 109. There's no weekly levels in there, but it is kind of your prior range highs. Like there was a little range in here. Prior highs are there. Man, yeah, it's just not a good sign what we're seeing here. We do have an order block in there. This little order block here. Right around your golden pocket. Yeah, so I would even say like 108 to 104 if you lose 139, 138. Money flow looks pretty bearish still. No real bull divs here. Yeah, that's a huge move. 1,000% there. But the fact that we're losing this upper range of all this upper price action, the fact that we're losing the value area low and we bearishly back tested that value area low and now we're dropping here. I mean, not a good sign, guys. So Sui is probably going to come down there. Jason, what's up, man? Welcome in. Thank you so much for being here. Dude, thank you for that super chat. You did not have to do that. Welcome in, Jason. I love you, man. It's so awesome to see you, dude. What do you think, Jason? Are we dropping? We're looking right now on Bitcoin. You know, that 786 is coming in at 85.5. Just below that, we do have some pretty key support. Here's what I was looking at, Jason, with our impulse from our all-time high. Now, we were looking at this as a distribution range. This range up here is distribution. And why were we looking at that as distribution? Because as the range was forming, we were getting the triple drive of bear divs, higher highs on the price action, lower highs on the momentum waves, and money flow was draining out of the asset as the range formed. The last time we had that was back in January and February when, as we were forming the range, we were getting higher highs on the price action, making the bear divs, lower highs on the price momentum waves. And as the range was forming, money flow was draining out. And I made a video right in this area saying we're about to distribute. And sure enough, we distributed down. So we're seeing kind of a repeat of that pattern right now on the charts. And from our all-time high, if you look at the Elliott wave pattern, impulse pattern we could be seeing a wave 1 here, a wave 2 here. Now our wave 3, the 1.618 is at 84.4. You can see 84,378 is the 1.618 Fibonacci extinction. And right around that 1.618 Fibonacci extinction, we have a naked monthly point of control down there and a naked weekly point of control. So naked weekly at 84,575 on Coinbase and a naked monthly at 84.9. So we have a lot of confluence in this general area here. Let me just move this a little bit lower. And that purple line's just an alert line I set because I was being lazy. So 85.5 to about 84.5 is a level that we could see a bounce. But here's the thing, Jason, on an impulse to the downside, with that five wave impulse to the downside, let me turn these off. We could be looking at a wave 1, wave 2, wave 3, just to back test this Fibonacci channel that we're losing. And then our wave 5 could come down to take out the 74K lows. But with that golden pocket, that macro log golden pocket, and the reason why I'm putting it on log is if we look at the move up from 49K, if we go from 49K to our all-time highs, that is a 157% move. So 157% move, you need to take that Fibonacci, because if we change it to a regular Fibonacci and we look at the price action here, so if we go from, let's just take a trend line from the lows up to the highs here, and then from the highs up to the lows, that's not a proper 61% retracement. So in order to get the proper 61% retracement, you can see that's almost the same, right? That's like the 0.5 Fibonacci. So in order to get that proper 61% retracement, we need to turn that based off log scale. And when we do, it shifts it down to the proper 61.8% retracement level. And that is at 70K. Now, our prior range value area high is also at 70K right there, at 70K. And so I do think we might be able to. Also, I don't know if you were here at the beginning of the stream, Jason, but I showed on this chart, and I've been looking at this for months, literally for months. We had let me move out to the weekly time frame. We had our 5-wave impulse in the bull market, a very clear 5-wave impulse to the upside. And the reason why we're ending this impulse here in February or in late January is because we finally broke weekly market structure bearishly. By taking out that low at 89,256, you broke market structure bearishly on the weekly, meaning this impulse could be done. Now, we moved down for a few months. We bounced from 74K. We bounced from 74K because it was a very key pitchfork support level. Very, very key pitchfork support level there. But then after rising up to our flat targets in an ABC flat correction, your targets between the 1.236 and the 1.382, we came right up into that flat target area. We rejected, and now we're impulsing down again. And the target for this impulse down is to take out your 74K lows. But just like I think it was Mark Dutch or Machi Che just pointed out on the stream earlier, if we zoom into the daily chart, you can see between your 74K lows and your 70K golden pocket, there's a big fair value gap in there. This right here, this big giant fair value gap right here. So that fair value gap goes right into your golden pocket, right into the 70K lows. Let me turn that off. And if we pull that golden pocket on this chart, you can see that golden pocket right there, right in alignment with our prior range value area high. And if we turn on that fair value gap, that daily fair value gap, look at where the daily fair value gap fills, right into the golden pocket. So either we SFP 74K and don't really enter and we kind of bounce off the top of this fair value gap, or we flush straight through that fair value gap into your golden pocket at 70K. And for me, because we're looking at a flat here, we could see that move down to 70K. It's likely to take out your 74K lows now on macro timeframes. Now, I'm not saying we're going straight down there. We're going to get bounces along the way, guys. We will get bounces along the way, but it doesn't look good. And it does look impulsive price action to the downside. And how do we know that this is impulsive to the downside so far? Because if we turn on our volume here and we look at our volume is increasing on the move to the downside. That means it's more likely to be an impulsive move, healthy move to the downside rather than a corrective move here. And that's why I'm looking at potentially coming down. Another thing to look at here is if we go back to our Coinbase chart, let me turn off this volume, get it cleaned up. This is our pitchfork. Let me just get rid of some of this smaller stuff here. Not our pitchfork, our Fibonacci channel. And I know, Jason, I've been showing you this channel for at least 2 years on your channel, in your Discord. But if we look at the 3-day time frame, this channel, this original channel was pulled from the beginning of the bull market. So let me turn off the Fib channel and I'll turn on the original channel. This was the original channel, and it was pulled from the bear market lows to our first break in market structure, confirming a bull market, right? This break in market structure right here, we didn't quite break it here. We double topped here. So when we broke it, now we're saying, oh gosh, macro time frame analysis is suggesting a bullish trend. We broke above it, we back tested it, and then we made a flat correction. This was another flat correction, very similar to what we could be seeing a larger flat correction up here. But we saw that flat correction, we took out the highs, then we took out the lows, and then we kept moving up, right? So from that original low, break in market structure, started the bull market. We can now take our main pivots and we can put on that ascending channel. And look at where we topped out. This was right after the BlackRock listing. I remember in your Discord, Jason, a few years ago, everyone was calling for a TIDK God candle to the upside. And I said, no, we're going to see a TIDK God candle to the downside. And we did. And that was your golden pocket from the bear market lows to the bear market highs. Let me see. That was your non-log golden pocket. And we did come right up to that golden pocket. We rejected it. But then we came down to the midline and we bounced from the midline. Now, after bouncing from the midline, we broke out of the channel. And that is when you can put on your Fibonacci extinction. So we take this same channel structure and we just put on the Fib channel for it. And look at where our 2024 all-time high was. We rejected from the 1.618. I remember shorting this in Jason's Discord and taking it down to the back test of this main channel. But historically in this bull market, the midline is held through most of the channel. We get some wickage past it, but the midline is held. When we broke the midline and flipped it to resistance a couple weeks ago, I was really bearish when we did that a couple weeks ago. Now we're breaking the absolute bottom of the channel. Like, this is the scariest part. We're breaking the bottom of the channel. And yesterday, if you guys watched my video yesterday, I talked about how, let me go into the daily time frame. On the daily time frame, we wicked below the channel. We made new lows for the day, but we closed right at the base of the channel, and it was also our anchored VWAP from the 49K lows. It was also right at the base of your anchored VWAP from the 49K lows. So we held it. But today we broke down with volume to the downside, breaking below the anchored VWAP, breaking below and breaking our main bull market structure that has held us this entire bull market. It's scary to see this. So I do think we could come down a little bit lower. Yeah, and also the pitchfork. Let me turn on that pitchfork as well. Let's go to our wave 3 pitchfork. Now, this wave 3 pitchfork, not this one. That's your wave 1 pitchfork. There's your wave 3 pitchfork. Our wave 3 pitchfork has guided us through most of 2025. It's pulled from the wave 3 lows of our big weekly impulse to your wave 3 highs down to your wave 4 lows of your corrective move of 2024, your corrective range. I shorted when we touched the top of it here. I got so much shit back in December when I did it on the total 3 market cap, total 3 market cap, when I shorted the top of the pitchfork here. And I said, guys, I'm taking profits on alts. We're going to make a way down. And now Bitcoin, after touching the top, we lost the midline. We back tested the midline. We came down to the lower band. We bounced from the lower band. We came up to the upper band. We rejected the upper band, and now we're losing the pitchfork here. And that was super key. We needed to hold this anchored VWAP, the pitchfork, and your Fibonacci channel, and we're losing all of them. It's just, and it looks impulsive to me. It looks impulsive that we're going to continue down here. Now, after the impulse finishes, wherever that impulse finishes, whether it's 74K or 70K, let's just say it's going to go to 70K. We're going to pull our Fibonacci golden pocket from the all-time high down to, I'm going to put it right on 70K. Right there, 69.8. That golden pocket there, wherever that golden pocket is, after your impulse to the downside finishes, you're looking for now a 3-wave corrective move up to that golden pocket. And if you see a 3-wave corrective move, that's pretty much going to confirm lower high bear market starting. Maybe we drop to 55K, where your anchored VWAP from the low is in confluence with your golden pocket. So your non-log golden pocket. But, and then this 3-wave corrective move, depending on how long it takes, usually it's slower. It's probably going to be in alignment with the bearish backtest of the pitchfork that we broke down from. We'll have to see how that works out. Very similar to like what we did with Bitcoin dominance, guys. But it just doesn't look good to me. Now, also, I want to show you guys one other thing. I didn't show you this at the beginning of the stream, but this pitchfork is a pitchfork pulled from, now this is not the way you pull a conventional pitchfork, but it's from the bear market lows or the semi bear market lows, that little mini bear market in June of 2021 to your 69K highs down to your bear market lows. And look at how well this pitchfork has been respected. You know, you rejected the lower band, you made a higher low, you flipped the band to support. After seeing a flat correction, you bounced from the bottom of the lower band. You came up, you flipped the midline, you came up to the upper band. You rejected the top of the upper band twice. Then you rejected the bottom of the upper band. Then you came up to the top of the pitchfork, rejected perfectly the top of the pitchfork twice, and then you saw the distribution on attempting to try to break it. We were attempting to try to break it. If we could have broke out here, it would have been really nice, but we didn't. And now we're falling and back to inside of our band. So where does our lower band at 82K, 82.3K, we have a monthly level. Let me just mark out that monthly level real quick. And you can see that the bottom of the band is going to be aligning with the monthly level. So now let's zoom into the daily time frame and look at where the bottom of the band is coming in. Now it's probably going to take us a couple days to get down there. We might bounce, do something like this, but with the bottom of the band, there's a monthly level. So we might see a bounce from that monthly at 82.5 as well. But I mean, to me, it looks like we're going to maintain the overall downtrend until we get in. And oftentimes, guys, within these pitchfork bands, you form ranges. You form a range for a bit within the pitchfork band. So we might bounce from 84.4, come up to 90K, come down to 82, bounce and range in here for a bit. And then you get your last drop to come down to 70K. And that kind of range that you see in here like this could be your wave 4 of a 1, 2, 3, 4, 5. 5-wave move down. Either we hold this level or lose 70K, in my opinion. Lose 70K. Okay, wow. Yeah, I mean, you know, I am looking for a bounce from 74K, but yeah, it could be a lower high before losing it and really starting the bear market. It really could. Samuel S., welcome in, man. Thank you so much for the super chat. I appreciate you so much. And Steel and Stone, thank you for being awesome, man. Thank you for being here. And I hope that AVAX TA helped you a little bit. But yeah, around $13, I'm looking for some sort of bounce. Let's flesh through. And Golden Pocket will give us a daily a DCB. Let's see. What is that? A daily bullish div? Is that what you mean by DCB? Let's see how you do, Mark. Okay, so Jason, thank you, man. Appreciate you so much, dude. Appreciate you so much. Guys, I'm gonna head out too. I've been streaming for 2.5 hours. I just wanted to cover that really quickly for Jason, but let me see. Where would you pull the fib from? Because on my chart, Bybit USD perps, the chart, the 786 is at 83.3. Okay, wait, that's from the Bybit USD chart. Is that this chart here? Let's see. 85.4. Are you using log scale? You're probably using log scale, huh? Yeah, okay, you're using log scale. Now, that could be Dr. Rex, that could be good, but remember, you want to use that log fib when it's more than a 100% move to the upside. So if we go from 74K to 126K, it's only a 69% move to the upside. So you wouldn't quite use it yet. You would want to use it on a 100% move to the upside or more, even if you're on the log scale chart. Now, this still might be valid. And actually, I kind of like this because it's closer to your monthly level there. But remember, we have a naked monthly and a naked weekly point of control around 84.6K, where your regular 786 is. So that's why you're getting 83.3 for that, is because you have it on log scale. But it's not quite a 100% move. It's only a 69% move to the upside. Yeah, I think we're seeing a dead cat bounce right now. You want to raise Mark? Yeah, dude, you're working way overtime, man. You're doing 2.2 hours on Andy, 2 hours on Coons. Actually, probably like 3 hours on Coons, 2 hours for me, 4 hours for Frankie. I mean, dude, you are you are all over the place, man. You're a G. You're a trooper for sure, dude. For sure. And obviously, you've got to be super super good at trading because you actually pay attention in these live streams as well and you learn like the best methods that work from each of the good traders out there. I bet you are a beast at trading, man. A beast. But guys, I'm going to take off. I'll be streaming tomorrow, 2 p.m. Eastern Standard Time as well. So thank you so much for this. Okay, so it's this, you're always on log scale. So am I, Dr. X. I'm always on log scale, but with the fib retracements in general, you generally don't want to use the log, even though you're always on log scale. Yes, I know it says click it based off log scale, right? But log scale is correcting for really volatile fluctuations in price. And if the fluctuation is less than 100% to the upside or less than 30% to the downside, generally the level is more respected on the fib when it's not clicked on log scale, even though your chart's always on log scale. Trust me, my chart is always on log scale as well. So it's just the testing I've done in the past. It does show that the Fibonacci levels, unless it's more than 100% up or 30% down, those Fibonacci targets do work better non-log scale. But we can, now that you've mentioned that to me again, I'm going to pay attention to that. Dr. X, we'll both pay attention to this over the live streams and the videos over the next months, and we'll see if it does tend to be respected, even if it's less than a 100% pump. So, but thank you guys so much. I appreciate you.